Finance explained for everyone. Questions you're too afraid to ask.
Have you ever caught yourself thinking that many things about money are just
confusing? Why do prices rise every year, but salaries barely change?
Why do the news constantly talk about central bank rates?
Where do the taxes you pay actually go?
And most importantly, why does almost nobody talk about these questions directly?
Sometimes it feels like everyone around you understands how the economy works.
Except you?
But the truth is that almost everyone asks these questions. Many people are just too embarrassed to say them out loud. Today we're going to break down some of the simplest, and at the same time, most uncomfortable questions about money. After this video,
you'll start looking at prices, banks, loans,
and even a normal supermarket in a completely different way. And if you enjoy simple explanations of complicated things,
subscribe to the channel right now. Let's begin. 1. Why do prices rise but salaries don't?
You've probably noticed something strange.
You go to the store, and suddenly a familiar product costs more than it did before.
Sometimes the price increases just a little.
Sometimes it almost doubles.
But there is another, even trickier tactic. Sometimes the price stays the same, but the product itself gets smaller.
Less weight, less volume, smaller packaging.
This is called shrinkflation, a hidden form of inflation.
But the real question is different. Why can prices rise quickly while salaries barely grow? The answer is actually quite simple. When the cost of raw materials,
energy or transportation increases, businesses immediately raise their prices. Otherwise, they might start losing money. But when it comes to salaries, the situation is different.
Companies ask themselves a simple question.
Why pay more if employees keep working for the same salary?
That's why wages grow much slower.
As a result, something happens that many people feel but rarely describe. Every year, your money buys fewer things. That's inflation.
In a way, inflation is like a hidden tax on your savings.
If your money just sits still, over time it slowly loses value. 2. What is the central bank rate and why does it affect you? You've probably heard this phrase in the news.
The central bank has raised the key interest rate. It sounds boring and far removed from everyday life.
But in reality, this number can determine whether you will ever be able to buy a home. The key interest rate is basically the price of money.
It's the rate at which banks can borrow money from the central bank.
And everything else follows from that.
If the rate is high, it becomes more expensive for banks to borrow money, which means
loans for people also become more expensive.
Mortgages get pricier. Businesses find it harder to borrow money. People start spending less.
And that is exactly what the central bank wants. When too much money circulates in the economy, inflation starts rising.
So, the central bank intentionally slows the economy down. It makes borrowing expensive so people save more and spend less.
It's like pressing the brakes.
But ordinary people are the ones who pay for those brakes.
For example, by paying huge amounts of extra interest on a mortgage. If things are already becoming a little clearer about how the world of money works, give this video a like.
That helps the algorithm. Show it to other people who also want to understand finances better.
Now let's keep going. 3. Where do your taxes actually go? Imagine you pay for a subscription service.
For example, a streaming platform.
You pay every month and get access to movies, shows, and music. Now imagine another service.
It's called the government, and its subscription fee is taxes.
Every time you receive a salary, buy something, or pay for a service, part of that money goes there.
But where exactly?
Some of it goes to obvious things. Roads, police, the military, schools, hospitals, street lighting.
But there is another huge category of spending that people rarely talk about.
Government debt. Many countries have borrowed money for decades. Now a portion of taxes goes simply toward paying interest on those debts.
There is also another large category: social obligations, pensions, benefits,
government programs. In other words, your taxes don't just pay for today's expenses.
They also pay for promises governments made many years ago. 4. Why gold still has value? We live in a world of digital money. Most money doesn't even exist as paper bills anymore. It's just numbers in bank accounts.
So a logical question appears. Why does the world still need gold? Why do central banks store tons of it?
The answer is simple. Gold cannot be printed.
Any currency can be created by pressing a button, but gold has to be mined from the ground.
And its supply is limited.
That's why during times of crisis or uncertainty, investors start buying gold. Because it exists independently of governments and banks.
Gold doesn't pay interest.
It doesn't grow on its own, but its power lies somewhere else.
It's a backup plan in case the system fails.
5. Why economic crises keep happening. If you look at economic history, you'll notice a strange pattern. Major crises tend to happen roughly every 10 to 12 years.
Why?
Because the economy works in cycles. First comes growth.
Companies expand.
People take loans. New factories and homes are built. Everyone starts earning more.
Optimism spreads. But slowly, debt begins to accumulate.
Investments become riskier.
The economy overheats.
And eventually something happens that we call a crisis. Companies go bankrupt. Prices fall. Unemployment rises.
It's a painful process. But in some ways, it cleans the system.
Weak companies disappear. And new ones take their place. 6. Your credit score. Your financial reputation.
When you walk into a bank asking for a loan, the manager doesn't know you personally.
They don't know if you're a good person. They see only one number. Your credit score. It measures how reliable you are as a borrower. If you pay your loans and bills on time, your score increases. If you miss payments, it drops.
But there is an interesting paradox.
If you have never taken a loan, your score can also be low, because the system simply doesn't know if it can trust you. For banks, the ideal customer is
someone who regularly takes loans and regularly pays them back.
The higher your score, the cheaper money becomes for you. The lower your score, the higher the interest rates you'll face. 7. The illusion of choice in the supermarket. When you walk into a big supermarket, it looks like there are endless choices.
Hundreds of brands.
Hundreds of products.
But if you follow who actually owns those brands, the picture changes.
It turns out that most products in the world are produced by a few.
Dozen large corporations. Different names.
Different packaging. But often the same owners. This creates the illusion of competition. In reality, large corporations simply divide the market among themselves. 8. Passive income, myth or reality. On the internet, you often hear a beautiful phrase, make money while you sleep. It sounds incredibly attractive.
But reality is more complicated.
Passive income does exist,
but it almost always requires either a large amount of capital
or a huge amount of work at the beginning.
For example, real estate must be bought, renovated, and rented out. Stocks require research and analysis. Businesses must be built and managed.
So real passive income is usually the result of years of work, not a magical money button. 9. How corporations sometimes pay almost zero taxes. Sometimes you hear surprising news.
A giant international corporation paid almost no taxes.
How is that possible? The secret lies in something called offshore structures. A company may register its patents or intellectual property in a
country with extremely low taxes.
Then its branches in other countries pay huge royalty fees
to that entity for using those patents.
As a result, profits appear to disappear in high-tax countries and reappear in places where taxes are close to zero.
This system is completely legal,
but it creates a huge gap between global corporations and small businesses. 10. Artificial intelligence and the future of money.
And finally, the most important question about the future.
What will happen to money and jobs as artificial intelligence becomes more powerful? AI is already analyzing markets faster than humans.
It can review financial reports, detect errors, and predict trends.
Some professions are already beginning to disappear.
But at the same time, new ones are emerging.
People who know how to use technology become far more productive. So the main conclusion is simple. In the future, value will not come from routine work. It will come from people who can work with technology and create new ideas.
Finance often feels like a complicated and closed world.
But when you break it down step by step, it becomes clear.
The economy isn't magic.
It's a system of rules, and the better you understand those rules, the easier it becomes to make smart decisions. If this video helped you see money in a new way, like the video and subscribe to the channel.
And write in the comments one question
About money you've always wanted to ask, but felt embarrassed to. It might become the topic of our next video.